Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 26th of November 2016, and we're providing our gold and silver weekly update for the week ending the 25th of November. Gold fell in US dollar terms last week by $24, from $1,207 to $1,183, having hit a high of $1,220 and a low of $1,178. In sterling terms, gold finished the week at £949, that's down £30, and in euros it closed at €1,117, that's down €24 on the week. Silver fell 5 cents, from $16.59 to $16.54, having reached a high of $16.90 and a low of $16.18. In sterling terms, it closed at £13.25. That's down 19 pence for the week. And in euros, it closed at 15.61 euros. That's down just 0.01 euros. The gold to silver ratio fell from 72.75 to 1 to 71.52 to 1. The Dow Jones closed on Friday at 19,152, up 68 points on the day and up 285 points on the week. And the NASDAQ closed at 5,398, up 18 points on the day and up 77 points on the week. Brent crude was up 38 cents at $47.24, and US light crude was up 37 cents at $46.06. The dollar index stands at 101.49, up 0.28 on the week. In our last weekly report, we predicted that gold could fall below $1,200. If not last week, then certainly by the 10th of December. Well, it did just that on Wednesday. Having fallen in excess of 10% from a brief post-US presidential election high of $1,337, the precious metal remains under pressure, ahead of an expected increase in US interest rates next month. New figures show spending by US companies grew 4.8% last month, its biggest gain in a year. Coupled with recent strong labour reports and positive rhetoric from policymakers, this has convinced traders borrowing costs will rise in December. Technical analysts predict that gold could very well move between support at the $1,152 level and resistance at the $1,234 level an ounce. If the lower level is reached, then it could indeed be quite possible that the May lows of $1,080 could indeed be tested. Silver markets had a volatile week, but eventually found some stability around the $16.50 level. From a technical point of view, the resulting candle was relatively neutral, so we could potentially see a bounce, but the US dollar strengthening is going to work against the value of precious metals. Confidence will only rebuild should silver advance beyond $17 again. Having said that, despite silver's relative strength, it is becoming quite clear that the gold markets have already broken down, and it would normally be typical for silver to follow its lead. So where are we heading from here? The gold price has retreated over 10% since November the 9th. And this includes its price stabilizing somewhat because news that the Russian central bank had added a further 1.3 million ounces in October. Also, continued central bank buying under the $1,250 an ounce is supporting the price and offsetting pessimism in the future market. That said, this is now almost totally a dollar play for the next few weeks, and the continued rise in world stock markets. We can still see gold and silver prices fall further from current levels, perhaps as much as 5% between now and the end of December. However, next week may see a little consolidation, if not a small bounce, but it won't last long. Finally, platinum prices have fallen another $12 from $920 to $908. We can envisage prices moving slowly back into the late $1,800 territory, though we suspect the downside is quite limited. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.